New tonight, Trudeau threatening Trump, the outgoing Canadian Prime Minister warning President Trump of immediate
Tesla taking the biggest hit, down 6%. That's not the only potential headache.
Elon Musk knows that Pierre Poilievre is his guy.
Nor I asked for these tariffs. In fact, I was surprised when they were announced. Tesla competes quite well in the market in China with no tariffs and no differential support. In general, I'm in favor of no tariffs. I'm also actually in favor of no tax incentives.
Tesla is in trouble, big trouble. And this time it's not because of production delays, recalls, or Elon Musk stirring up controversy on social media. No, this time the problem is coming from somewhere far more unexpected: Canada. In a move that has sent shockwaves through the auto industry, Canada has just hit the United States with a fresh wave of retaliatory tariffs, and Tesla is one of the biggest casualties. At first glance, it might seem like just another trade dispute, a tit-for-tat battle between governments that will eventually blow over. But that's not what's happening here. And if you think this is just a Canadian problem, think again. The ripple effects could spread far beyond North America, shaking Tesla's global operations to the core.
Canada was quick to retaliate after President Trump's tariffs went into effect.
The press secretary said during this month, what these automakers can do is sort of re-rack their manufacturing so they can start shifting things that happen in Canada and Mexico to the United States. Like, let's get real. There are not empty factories owned by Ford and GM ready to produce certain parts with auto workers ready to do it. Like, this isn't even possible. What are they talking about?
These tariffs are calculated, strategic, and designed to hurt. The impact isn't just being felt at Tesla's sales offices in Canada. It's rippling through the entire supply chain, threatening battery production, increasing costs, and putting thousands of jobs at risk. This all started with the Trump administration's decision to slap a 25% tariff on imported steel and aluminum, a move aimed at protecting American manufacturers, but one that had unintended consequences. Canada, being one of the largest suppliers of these materials to the U.S., wasn't going to take it lying down. They responded with tariffs of their own, targeting industries that would feel the pain the most. And now, with tensions rising again, Canada has doubled down, hitting Tesla where it hurts the most: vehicle imports and battery materials.
Today, U.S. Commerce Secretary Howard Lutnick hinted the U.S. may look to reach an agreement to lower tariffs with both Canada and Mexico. CBS News' Lana Zak is in Windsor, Ontario, with more.
Hi there. Consumers are going to become acutely aware of how intertwined the U.S. and Canadian economies are, particularly when it comes to manufacturing. I'm here on the factory floor of Laval International. That's why I have these safety glasses on. And I spoke with the CEO, Jonathan Azzopardi, who told me that things cross back and forth from his shop to his American suppliers multiple times, and explained why that added up.
So in that scenario,
for Tesla, Canada has been a goldmine. The country's vast roadways, eco-conscious consumers, and generous government incentives for EV buyers have made it one of the company's fastest-growing markets. The Tesla Model 3 in particular has been a runaway success, dominating Canada's EV sales charts year after year. But that success is now hanging by a thread. These new tariffs act like a tax on every Tesla vehicle entering Canada, sending prices soaring overnight. A Model 3 that was already at the higher end of affordability for many Canadians is now becoming a luxury item, priced out of reach for average buyers. And what happens when consumers see that price jump? They start looking elsewhere. They start considering alternatives like the Ford Mustang Mach-E, the Rivian R1T, or even homegrown Canadian EVs that don't carry the same tariff burden.
I will say it took longer this time to walk back the tariffs than it did last time. If you remember, like just a month ago, people are having a hard time keeping track. Early February, he said on like a Saturday he was going to put them in place on Tuesday, and then by Monday mid-morning they were called off. During his first term, he had threatened to put tariffs on Mexico. Then a few weeks before those were supposed to go into effect, he called them off. If you're starting to see a pattern, so am I, about how these tariffs work. But the one thing that does remain consistent is this administration continues to talk about tariffs in one.
That's where the real danger lies. It's not just about Tesla losing a few sales, it's about consumer behavior shifting permanently. Once buyers get comfortable with other brands, once they establish new loyalties, Tesla might never get them back. And this isn't just speculation. This is exactly what happened in other industries affected by trade wars. Once companies lose their foothold, it's almost impossible to regain.
For EVs, but provided that there are also the tax incentives for oil and gas must also be eliminated. So I'm in favor of no tariffs and no incentives for electric vehicles or for oil and gas. And if they're all taken away, I think that would be for the best.
Arjun is with me. You were at the same Q&A with Elon Musk last night. It was eventful, wasn't it? I pitched this question around the deliveries, actually, for a low-cost EV that the market's been wondering, is it coming to market? What's the timeline? I pitched that question along with whether there was a green light now because of these tariffs that the American...
But this isn't just about Canadian Tesla customers paying more. That's only one part of the equation. The bigger problem, the one that has Elon Musk scrambling behind the scenes, is the massive disruption to Tesla's supply chain. Because Tesla doesn't just sell cars in Canada, it also relies on Canada for key raw materials that are essential to making those cars in the first place: aluminum, nickel, and lithium. All crucial for EV batteries are now caught up in the trade war. The cost of getting these materials into the United States has skyrocketed, and it's putting a massive strain on Tesla's battery production operations.
A third of the exports from Mexico to the U.S. come from companies that are U.S. owned. You look at a company like Walmart, 80% of the products that fill its shelves come from Mexico. And all of these gentlemen were completely dumbfounded as to why Trump was pursuing this, because they don't see it as a trading relationship. It actually isn't a trading relationship like we have with China. It is this deeply intertwined production partnership. And it's up and down the supply chain on automobiles. It's in electronics, agriculture. You can just go on down the line. And Trump is simply shooting the U.S. economy in the foot for this.
The consequences of this could be devastating. Tesla's Gigafactory in Nevada, one of the most important EV production facilities in the world, depends on a steady and affordable supply of these materials to keep production running smoothly. If costs continue to rise, Tesla will have no choice but to pass those costs on to consumers, and that means higher prices, not just in Canada, but across North America. The price hikes won't just be for luxury models like the Model S and Model X. They'll hit entry-level cars like the Model 3 and Model Y, the very vehicles that Tesla is relying on to maintain its mass-market dominance.
Nor I asked for these tariffs. In fact, I was surprised when they were announced. Tesla competes quite well in the market in China with no tariffs and no differential support. In general, I'm in favor of no tariffs. I'm also actually in favor of no tax incentives.
And here's where it gets even worse. If Tesla raises prices too much, demand drops. If demand drops, production slows down. If production slows down, jobs get cut. It's a domino effect that could spiral out of control, and it all starts with what's happening right now between the US and Canada. And this is assuming the situation doesn't escalate further. But if the U.S. decides to retaliate against Canada's tariffs with even harsher restrictions of its own, we could be looking at a full-scale trade war. That would send costs even higher, force more companies to rethink their supply chains, and potentially reshape the EV industry in ways no one can predict.
Pay 25%. They send their car over here, 2.5%. 10 points, that's from Elon, but everybody knows it. They've known it for years. They never did anything about it. It's got to change. We're going to be doing a reciprocal tax program at some point so that if China is going to charge us 25% or if India is going to charge us 75% and we charge them nothing, if they're at 50 or they're at 75 or they're at 25, we're going to be at those same numbers. It's called reciprocal. It's a mirror tax. So they charge us 50, we charge them 50. Right now, they'll charge us 50, we charge them nothing. Doesn't work.
Elon Musk is facing one of the toughest decisions in Tesla's history. He has a few options, but none of them are good. He could absorb the increased costs and try to keep prices stable, but that would eat into Tesla's profit margins, which are already under pressure from increased competition and rising production expenses. He could raise prices and risk alienating customers, potentially losing market share to rival automakers who aren't affected by these tariffs. Or he could push for a trade deal exception, lobbying the US and Canadian governments to carve out an exemption for Tesla due to its role in the green energy transition. But trade negotiations take time, often years. Tesla doesn't have years. It has months, maybe even weeks, before these tariffs start causing real damage.
Very integrated with Canada. It is not only our largest trading partner, but also certain main products such as lobster and blueberries are often processed in Canada and then come back into the United States.
There's one last option, but it's the most extreme. Tesla could move some of its manufacturing outside of the United States. Expanding operations in China or even setting up a gigafactory in Canada itself would allow Tesla to bypass these tariffs altogether. But relocating production isn't something that happens overnight. It takes billions of dollars in investment, regulatory approvals, and years of planning, and in the meantime, Tesla would still be bleeding money from higher costs. This is the kind of situation that makes or breaks companies. Trade wars have taken down entire industries before. Steel manufacturers, agricultural giants, even tech companies have all fallen victim to shifting trade policies that made their business models unsustainable. Tesla is now standing on that same precipice. If it can't find a way to navigate this crisis, it won't just be facing a rough quarter or two, it could see its entire business strategy unravel.
Well, it could well be. And again, the big picture here, Tesla has just posted a dramatic $25 billion quarter, the biggest in their history, $97 billion for the year. They sold 1.8 million cars, and they have an astonishing 50% control of the American marketplace, more than all other EV sellers combined. But as you point out, Tesla's growth has slowed, 71% in 2021, 51% in 22. This last year, down to 19%. At the same time, BYD's come up like a rocket, selling 70% growth. They did 1.6 million vehicles next year. They're clearly going to pass Tesla.
And this is where the future of the EV industry itself comes into question. If Tesla struggles under the weight of these tariffs, what happens to the rest of the market? Other automakers are watching this situation closely. If Tesla is forced to raise prices, others will follow. If Tesla cuts production, suppliers that rely on Tesla's orders will suffer, potentially causing layoffs and factory shutdowns.
Chang. He's now the second most important man in China after President Xi Jinping.
Well, you don't get anything done without building relationships in China. Musk was very astute at understanding that and making sure that he built relationships in the city that gave him the best possible position in opening the market.
A star is born, Elon.
Another man who understands relationships is Donald Trump. He's threatening a trade war with China. And his new best friend is Elon Musk. So Musk is courting Trump and China at the same time and treading carefully on...
Right now, the Tesla-Canada trade war is fully underway. Prices are rising, supply chains are under strain, and customers are being forced to make tough choices. And the scariest part? There's no clear end in sight. This could go on for months, even years, with both sides digging in deeper, refusing to back down. Will Tesla find a way to weather the storm, or will Canada's aggressive trade policies deal a fatal blow to one of the most influential automakers in the world? Kindly let us know your thoughts in the comments below. Kindly like and subscribe. Thanks for watching.